This is my 15-minute scalping strategy that has been proven to make $10,350 per month. I'm not only going to show you step by step how to use this strategy, but I'm going to show you real results that proves that this strategy works. I will give you an exact checklist so that you will know how to enter, how to exit, and so that you can take all of the guesswork out of trading. Hi guys, for those of you that are new here, my name's Liam and I've been trading, investing, and coaching within the financial markets for the last 8 years. In that time, I've helped hundreds and hundreds and hundreds of traders not only get funded, but to become consistently profitable. I'm also a mathematics and finance graduate from Newcastle University, and I've just learned so many different strategies, tools, and techniques along the way. And that's why in this video, I really want to share with you everything that I've learned. And so with that being said, let's dive into this video. Okay, so this is a fully mechanical, rules-based trading system that will take all of the guesswork out of your trading. This is a one time frame strategy. And this strategy will be traded on the 15-minute time frame. So you don't need to be chopping and changing, doing multi-time frame analysis. You can trade this simply based on one time frame. But it's very important to note that you need to follow every step closely. Because if you miss just literally one of these steps, then you will not be profitable trading this system. So make sure that you're following very, very closely. So this right here is the checklist for the 15-minute time frame strategy. And step number 1 is a daily directional bias. So all this simply means is, are we bullish, bearish, or do we have no daily directional bias? So we will have a bullish bias when the 50 is greater than the 100, which is greater than the 200 exponential moving average. So let's say this is the 50, let's say this is the 100, and let's say this is the 200 EMA, then this would indicate to us that we have a long daily directional bias, and so we would only be looking for long positions. We would have a bearish bias if the 50 exponential moving average is less than the 100, which is less than the 200. This would indicate that we are sell bias on this market. So this just is a objective way to identify, whether we're bullish, bearish, or have no bias whatsoever. And then finally, let's say that the EMAs are crossed over. So this could be in any order, right? This could be, the 50 has crossed over the 100, or this could be that the 100 is crossed over, say, the 200. So it doesn't matter which EMAs are crossed over, but if they are not in order, so for example, like in this order right here, so you have the 50, 100, and 200 in a clear order, then if they're not in order, right, i.e. they are crossed over, this will act as a filter, and so we would have no daily directional bias. We would have no bias on this market, and this would mean to us as a trader that we are not looking for any positions in this market. So what this is going to do is it's going to take all of the guesswork out of your trading, because now you have an objective way and you can look at the market and you can instantly tell whether you're bullish, bearish, or you have no bias in the market. Because, especially if you're a new trader or if you're a struggling trader, right? A huge problem that so many traders are facing is 1 minute they're long, 1 minute they're short, and they just kind of keep flip-flopping from their bias, right? So what this basically is doing is anchoring your bias. This is pretty much going to be your bias for the day. And so this is just a really simple approach of doing that. Okay, so step 1 was amazing, but if you don't understand step number 2, you will never be able to time the market correctly. And step number 2 is a session-based manipulation. So if we are bullish in the market, we need to see a manipulation below the previous session's low. So for example, let's say we're bullish, right? We indicate this based on the EMAs, right? Okay, so this would be your bullish market right here. Okay, and let's say that this is the London session low, right? So let's say that you're trading the New York session. Then what you're going to be looking for is a manipulation below the London session low, a manipulation lower, and then we can look for a trade higher. And this really just means to you that you're getting a discount in the market, and vice versa, guys. Let's say that you're bearish in the market, right? So this is going to be based on the EMAs, right? So this is your market right here. And again, let's say that you're trading the New York session, right? Let's say this is the London session high right here. Well, you're going to be looking for a manipulation higher above the previous session's high, right? Before you can look for a shorting opportunity. This will ensure that you're entering during a pullback phase in the market rather than entering down at the low when the market is susceptible of actually pulling back, right? So this just ensures that you're getting in the market at a much safer time, and this will in turn increase your edge in the market. This will increase your probability of success. Okay, so step 2 is amazing, but if you don't understand step number 3, you will never be able to pinpoint your entry in the market. And so step 3 is entry confirmation. So let's say that you're bullish in the market, right? All that you're going to be waiting for is a 15-minute bullish candle confirm during a New York or London kill zone, right? So this 15-minute trading strategy can be traded in the London session, but it can also be traded in the New York session as well. If we are bearish in the market, then we need to see a 15-minute bearish candle confirm during a New York or London kill zone. It's very important to make a note of the kill zone timings, right? The session timings. We have the New York session, which is from 8 a.m. until 10:30 a.m. Eastern. And we have the London session, which is between 3 and 5 a.m. Eastern. So entries for this system will only be taken during these high volume sessions, because this is when the most amount of liquidity is available, and this is when the markets are most likely to trend. So we're not looking at taking trades outside of these kill zones. And so this is absolutely vital to your success when trading this system. Okay, so again, we're bullish in the market. We've seen a manipulation lower, right? Then what we're waiting for is, as long as this is during, let's say, a New York kill zone, so this is between 8 and 10:30 a.m. Eastern, then what you're waiting for is a 15-minute bullish candle closure, and then you can look for a potential entry, right? So this is the confirmation. This is essentially your entry trigger in order to get involved in the market. So this is basically going to be in the form of a bullish candle closure. So this is just going to look something like this, right? And this is going to indicate to us that momentum is actually stepping into the market, right? And so once we've seen the bullish confirmation, we're going to be entering on the break of this candle high. So this is absolutely vital, right? We're not taking this trade based on the closure. We're taking this trade based on when price breaks this candle high. So if price doesn't break this candle high, then you're not going to be triggered long in this market. So you can do this by market execution, but a better way to do this is by simply setting a buy stop just above the candle high, account for spreads in the market, and then you will be triggered long. So this is absolutely vital, and I'm just going to repeat that again, right? We're not entering on the closure of the bullish candle. We are entering as price breaks the candle high. This is your true confirmation, right? And again, the price and you have to be triggered in this trade during the kill zone, right? So even if you get your confirmation, right, and we're now outside of the kill zone and you've not been triggered long, well, then this is not a valid trade. So it's really important that you're sticking within these kill zones, right? And so vice versa. So we are bearish in the market. Let's say this is your London high. We see a manipulation higher. Then what we're waiting for is a 15-minute bearish confirmation, right? So let's say this is your bearish candle right here. Then what we're looking for is for price to break the low of this candle. Then we can be triggered short in this trade. So we're not entering on the closure, we're entering on the break of this. This is going to be via a sell stop in the market. If you want to keep it extremely rules-based, or you can enter via a market execution. But the problem with that is you can encounter slippage. You might be late of getting in the trade. And so setting a sell stop or a buy stop ensures that everything is fully mechanical, right? Everything is fully rules-based and everything is defined. Okay, so step number 3 was amazing. But if you don't understand step number 4, you will never know where to have your invalidation and you will never know actually where to target in the market. And so step number 4 is stop loss and take profit placement. So if you're bullish in the market, right, based on all of the confluences above, then our stop loss is going to go below the manipulation, right? So if we're getting long here on the break of this candle high, right, our invalidation, our stop loss will go below the manipulation. So this is going to be your stop loss. And then we're going to be looking at targeting a mechanical 1 to 2 risk to reward, right? So we're not looking for a home run. We're just looking at taking small, repeatable, bite-sized pieces out of the market, right? So if this is your stop loss, we're going to be looking at targeting 2 times your stop loss, okay? So let's say that this distance right here is 30 points, okay? Let's say that you're trading ES or you're trading US 500. So if your stop loss is 30 points, you're going to be targeting 60 points, which ensures that you have a 1 to 2 risk to reward. So another way to look at this, let's say that you're risking $2,000 per trade, right? You're going to risk $2,000 right here, looking to make $4,000, right? So whatever you're risking per trade, you're going to be ensuring that you're making 2 times that. Vice versa, let's say you're bearish in the market, like this example right here. Your stop loss is going to go above the manipulation and you're going to target a 1 to 2 risk to reward, right? So let's say you're triggered short in this trade right here. Your stop loss will go above the manipulation high and then you're going to be targeting 2 times your stop loss size, right? So let's say this is 15 points, right, for your stop loss. Then you're going to be looking at targeting 30 points, right? Whatever your stop loss size is, you're going to be targeting double that size. And, you know, let's say you're risking $3,000 for your stop loss. You're going to be looking at making $6,000, right? So whatever you're risking, you're going to be looking at making 2 times that. And then, you know, you're going to be looking at for the market to trade lower. And either your stop loss is going to be hit or your take profit is going to be hit, right? I know that sounds very, very simple, but what I mean is there's going to be no micromanaging in these positions, right? So once you're triggered long, it's either stop loss is hit or take profit is hit. There's no micromanaging. There's no going break even early. There's no getting emotional, right? Once you're triggered, it's up to the market to determine the outcome of this trade. Right? So no micromanaging, no interfering, allow the trade to play out. And so this is the exact checklist on the 15-minute time frame. And another thing that everybody asks is, you know, what assets are you looking at trading this on, right? I know this is a very common question. So this works very, very well on the likes of ES, right? US 500, on the likes of gold, okay? And it also works very well on euro dollar, and also GBP USD, okay? But I encourage you not to take my word for it. I want you to backtest this as well, right? But I primarily trade this on ES, US 500, and I primarily trade this on gold as well. So we're looking at gold on the 15-minute time frame. What I first want you to do is head over to the indicators tab at the top of your screen. And then what I want you to type in is EMA 20, 50, 100, and 200. It's this indicator right here by Dr. Sweets. So double click this indicator, add it to your chart. And then I want you to type in trading sessions-sonar lab. It's this indicator right here by Vutra Trading. And this is the indicator that I use to indicate the session timings in order to look for the manipulations. So click this, add it to your chart. And then what I want you to do is double click the EMA indicator and then uncheck the 20. So this top one's the 20. Uncheck this and then click OK. And then I want you to check the Sonar Labs session indicator. So this should be automatically set up for you, right? What you're going to have is the Asia session from 7 p.m. until 12 o'clock midnight. We have the London session from 3 a.m. until 5 a.m. And we have the New York session from 8 a.m. until 10:30 a.m. Eastern. Okay, so now what I'm going to do is a live backtest, right, to prove that this system works, right? So we're looking at March. Okay, this is gold on the 15-minute time frame. And so step number 1 is daily directional bias, right? This means, are we looking for longs? Are we looking for shorts? Or do we have no bias in the market, right? Well, what we can see is the 50 EMA is greater than the 100, which is greater than the 200, right? So this indicates to us that we have a long daily directional bias. And so we are only going to be looking for long positions in this market. Step 2 is a session-based manipulation. And so what we're looking for is we're looking for price to trade lower, below the Asia session low, right? So a manipulation lower, and then we can look for the market to trade higher. So as you can see, we have the New York kill zone right here. So this is from 8 a.m. up until 10:30 a.m. We have actually manipulated London. So what you could do is actually mark on this London low right here. So I'm going to do this like so. And so essentially we can be waiting for a bullish confirmation. We don't get that. And so what we do get though is a manipulation below Asia low. So if we did confirm bullish here, you know, in this kind of area, then we could have looked at taking a long position to the upside. However, you can see, right, New York session opens up. We get this dump. We get this manipulation lower below the Asia low. And what this is going to do is this is going to induce traders short into the market. They're going to see this as like a breakout to the downside. And so they will be getting induced short. What this is also going to be doing right here is it's going to be stopping out any early buyers, right? If you're long in the Asia session, or if you're long in the London session, well, your stop losses are going to be within this area, right? Of course, I don't know exactly where that's going to be, but I know they're going to be within this area. So what this move and what this sort of price action is essentially doing is stopping out any early buyers. What this does is it forces them to sell at current market prices. So essentially this is inducing a lot of selling pressure into the market, and that's really what manipulation is doing. Okay, great. So we've seen the manipulation. Now we need to see a bullish 15-minute confirmation. So this is what we get right here. So it might be quite kind of difficult to see, but if I zoom in here, you can see this candle's green, right? This is a bullish candle. I don't care if it's got a small body. I don't care if, you know, there's a wick to the upside, right? If it's bullish and it's during the kill zone, then this is an indication to me that buyers are actually stepping into this market after we've seen the manipulation. Okay, so this is step number 3, right? This is the confirmation. And so what we then need to do is place a buy stop above the bullish candle high. And then step number 4 is we need an invalidation below the manipulation low. And we're looking at targeting a repeatable 1 to 2, right? A mechanical 1 to 2. We're not looking for a home run in the market. We're just looking for a small piece out of the market. Okay, so I was triggered long in this trade right here, and then it's just a case of setting and forgetting this trade, right? We're not looking at micromanaging. We're not looking at getting emotional. We're not looking at closing this trade early, right? And as you can see, this trade did hit take profit for a mechanical 1 to 2. You bank your profits, you take your profits, and then you rinse and repeat this system. It's very important to point out that a lot of traders may have got emotional right here. So on these kind of pullbacks in price right here, you know, traders may have closed this trade early, but it's really important, and I can't stress it enough, that you need to just allow the market to play out. Okay, so we're looking at gold on the 15-minute time frame. And again, the first thing is our daily directional bias, right? 50 greater than the 100, greater than 200. This indicates a long daily directional bias. So just in terms of like a kind of general market perspective, you can see that prices are clearly moving to the upside, right? The trend is clearly to the upside, okay? So we're only looking for long positions in this market. And so step number 2 is we need to see a session-based manipulation, right? So this is your Asia low. So I'm going to go ahead and mark that on, right? So because we're trading the London session, we need to see a session manipulation. And so the only session that is the previous session, right, which is the Asia session. So the London session is really easy to navigate because the only liquidity available is the Asia session, right? And so we're waiting for London open right here. And so what you can see is we get a bullish confirmation right here. So this is during the London kill zone, right? One thing I want to point out here at the bottom of the screen, it does say 4 a.m., okay? But it's really important that you're aware of the time zones, right? Because during March, right, we have something called daylight savings, okay? This is a period in time where, you know, the London clocks are going to change and the New York clocks are going to be the same. And so, you know, you might find that they might be slightly out of sync at the bottom of the screen right here, but don't worry about it, right? But it's just important that when you're trading the system or even when you're backtesting the system, to be aware of daylight savings, right? Okay, cool. So we get a 15-minute bullish confirmation during a London kill zone, right? And so we can enter on the break of this candle high. So this is your confirmation, step number 3. We can enter on the break of this high. In validation, you know, step 4, where does this go? Well, this just goes below the manipulation. And we're looking at targeting a repeatable 1 to 2, right? So this is a valid A plus setup. We're bullish in the market. We've seen a manipulation lower. We get a bullish confirmation during the London kill zone. We can enter on the break of this high. So let's see if we are triggered. And we're triggered right here. Note as well, we don't care if price has manipulated the Asia high, okay? Sometimes you're going to find that it manipulates both sides, right? So this is chopping people on both sides of this market, right? You know, so it doesn't matter that we've manipulated higher first. This is often what you find. We get manipulations on both sides of this market, right? So let's play this trade out. You know, there's going to be no micromanaging. We got a slight kind of push into profit around a 1 to 1. And now price is sort of slowly kind of moving back down, right? We're kind of chopping around in this area right here. Another kind of push to the upside. And then this trade did end up hitting stop loss, okay? So this stopped you out for a -1R. And I think it's really important to stress that you're not going to win every trade with this system. And so this was a valid losing position. Okay, so again, we're looking at gold on the 15-minute time frame. And we're heading into the London kill zone, right? Daily directional bias, step number 1, 50, 100, and 200, right? So we are long bias on this market. We're only looking for long positions. Therefore, we need to see a manipulation lower before we can look for a trade higher, right? So I'm going to go ahead and mark on the Asia low. We're looking for this to get taken out during this London kill zone. And you can see this is what's going on right here. And so this is step number 2, right? This is what you call a session-based manipulation. This is going to induce traders short, stop out any early buyers, etc., etc. Step number 3 is our bullish confirmation. This is your confirmation right here. And so we can enter on the break of this candle high. Invalidation goes below manipulation, right? So step number 4, stop loss and targets. Invalidation goes just below this candle low. Target, repeatable 1 to 2, right? So triggered long in this trade right here. And then it's just a case of setting and forgetting, right? No micromanaging, no interfering, just allow the trade to play out. And as you can see, this trade did hit take profit for a 1 to 2 risk to reward. Okay, so again, we're looking at gold on the 15-minute time frame, and we're heading into the New York kill zone. What you can see, again, EMAs are in order, right? 50, 100, and 200. We have a long daily directional bias. We're not looking for shorts. We're not looking at staying out of the market. You know, we're looking at getting involved today. You can see during the London kill zone, right? Although we were bullish, right? We didn't see that manipulation lower, right? So if we were trading this London session, you would have been looking for something like this, where we see that manipulation, then we can look at our confirmation and getting long, right? But you can see that didn't happen, right? What did we do? Well, we got essentially a further continuation to the upside. So this is why it's really important to sort of sit on your hands and wait for the market to come to you. So we have liquidity resting below the London low. So I'm going to go ahead and mark this on. Okay, so this is your London low, right? So we're looking for a manipulation lower. We're looking for price to trade lower before we go higher, okay? So we're looking for that manipulation to go with the trend, right? Remember, the trend is to the upside. The daily directional bias is higher, but we need to see price trade lower first. Give us that discount. Give us that manipulation, which is going to trap traders short. It's going to induce them short, stop out any early buyers. And then we can look at taking advantage of that. So let's play this on, right? We're heading into the open right here. And so we see a manipulation lower, okay? And this is actually like around 9:30 a.m. Eastern. So we're heading into the NYSE Open, the New York Stock Exchange Open, right? Again, we're expecting a lot of volume to come into the market. This is your manipulation. This is really important, okay? And I want to just zoom in here and highlight this, okay? So even if we wick below here, it doesn't matter. So whether we candle body close and manipulate, or we just wick below like here, it doesn't matter. It really doesn't matter, right? So this is your manipulation, okay? So we've seen step 1, right? Directional bias. Step 2, session-based manipulation. This is your manipulation right here. Step 3, we're waiting for a 15-minute bullish candle closure. This is your closure right here. We can enter on the break of this candle high. Invalidation, step 4, and targets, right? Invalidation at the liquidity or manipulation low. Target, mechanical 1 to 2, right? We're not looking for a home run. Yes, we might get one, right? But that's not our job, right? Triggered long in this trade right here, and this would be via a buy stop in the market. And then just a case of allowing it to play out, okay? And you can see within sort of 45 minutes, this trade had hit your take profit for a 1 to 2. So let's see if we get a continuation higher, right? I don't know, right? We kind of do during Asia, right? Quite a bit of a continuation higher, but this is not your trade, right? So understand that we're not looking at taking this kind of home run, right? This is a home run right here. This is not us, right? This is not us. What is us is taking this small piece right here that is repeatable, that we can control, right? We can control these variables. We can control these rules, banking them profits, and then coming back the following day in sessions in order to look for this setup again, right? This setup is not going to happen every day in the market, but when it does, you need to be there to take advantage of it. Okay, so this was my back test for March 2025, right? As you can see, there was 4 trades taken, right? Which I would say is pretty on the low side, but bearing in mind, you know, we're trading multiple pairs, right? We're not just trading one asset, okay? And what you can see is there was 4 trades in total. We had trades on Wednesday. Well, 3 of the trades were on Wednesday. 1 of the trades was on Thursday. We have the exact time of execution right here. We have whether this was a win, a loss, the P&L, right? The stop loss size, and also a screenshot of the trade, right? So if I just open this up right here, you can see the screenshot of execution, the screenshot of the trade. And so everything is being journaled right here. But what is more important is these metrics down here, right? You can see that there was 4 trades in total. We had a strike rate of 75%, and we had a percentage gain of 5%. This is how the system is proven to make, on average, $10,000, $350 per month. So let's say that you're trading a 200K prop firm account, $200,000 prop firm account, and you're risking 1% per trade. Okay, so this is pretty conservative, right? So you're using $2,000 as your unit of risk, and this is going to be consistent, right? We're not using variable risk, we're using the same amount of risk every single trade. So winning trades are going to net you $4,000. Losing trades are going to net you minus $2,000, right? Because remember, we're using a 1 to 2 risk to reward. So this is where things start getting very, very interesting, okay? So we're looking now at the data. So this is 12 months of data. This is over 200 trades, right? We have the data for gold, and we have the data for US 500, right? ES, okay? So if we zoom in here, the key takeaway is that you can see the percentage gain was 31%. So this is just on gold, okay, over 12 months, right? We also have the US 500, and the percentage gain was 30%, okay? So how does this kind of tie into this? How does this all kind of piece together, right? Well, over 12 months, the percentage gain was 61%, okay? So if we work that out on a monthly basis, on average, this equates to just over a 5% gain. Well, what that means to you, right, bearing in mind if you're being conservative, you're trading only 200K, right, this equates to just over $10,000 per month, right? Because your average return, which is 5%, you're going to times this by your risk, your unit of risk, which for us, you know, in this example, is $2,000, right? And so because we know the percentage gain is just over 5R, this equates to, on average, you're going to make per month $10,350 trading this system. Okay? And so, you know, this is how it's proven, right? Because it's backtested over hundreds and hundreds of trades, and it's supported from the data, right? So I actually encourage you, right? I encourage you to not take my word for it. I want you to go away. I want you to backtest this so you can see the results for yourself, okay? And bearing in mind, I'm funded over $800,000, okay? So we're running the numbers here with only 200K, right? So, you know, of course, it doesn't take a genius to work that out. As you start to scale your prop firm capital and you start to increase your size, increase your risk, you can see how the numbers really start to move the needle here. And, you know, like all systems, I want to make this very, very clear, right? You're going to have winning months. You're going to have losing months. You're going to have break-even months. But what really matters is that you have an edge over the long term, right? And this edge is backed up by real data and results. This is what will give you the inner confidence and belief in your trading system. This will give you the conviction for when you turn up to the markets, you know what you're looking for. You're not going to hesitate in the market, and you will have the utmost conviction in order to execute your trading system, right? Because this is taking all of the guesswork out of it. This is taking all of the discretion out of it. And then it's really just down to you, right, to actually implement the rules, follow the rules and a risk management process, and it's up to you to just execute your trading plan flawlessly. And if you can do that, then you will see the results over the long term. Okay, so this is the exact system that has allowed me to get funded over $800,000 in prop firm capital in just 90 days. This is also the exact process that has allowed hundreds and hundreds of our members not only to get funded, but to become consistently profitable over the long term in the markets. And this has allowed them to do this on a consistent basis, right? We're not talking about overnight success. We're not talking about, you know, home runs or one-time things. We're talking about my students that have been able to do this on a consistent basis over many, many months and years in the financial markets. If you would like to learn more and you would like to see me trade this live every single day in the markets with my exact live executions, trade plans, game plans, and everything in between, where I've put together over 40 plus educational videos covering absolutely everything that you need to know. and you would like to learn the exact blueprint to this fully mechanical, rules-based trading system that takes all of the guesswork out of it, then make sure to check out my exclusive community or one-on-one mentorship. The link is in the description down below. As always, thank you so much for your time and support, and you take care. Bye-bye.